Hi, folks. This is Sean Hyman from The Logical Investor, and I just wanted to run down some of the basics very quickly because we have had a few people join us lately. So, under the Ask Sean tab is where you can ask your questions in general. If you have questions about our picks, I prefer you ask those under the premium newsletters section in there, uh, and ask your questions. Really by alluding to the stock or by its the number of position that it is on our portfolio list rather than outright, because that would give our picks away freely to um, non-subscribers. And then fundamentals news and charts area has a lot of articles that I've written that are for free that you can share with people, and it's also where we have a lot of near-term banter and commentary and stuff like that as well. So but the important thing, for if you're new, go to the Ask Sean tab on your computer. Do it on your computer first because it's a lot easier to find things originally. But you can find things about how to get notified by email when I post on the site. So you can find out how to set up your email notifications, how to set up your charts. There's a video on that that shows you how to set up your charts just like mine for free. Um, how to know what I think about a stock market or economy. In other words, how to search the site for former picks if you're an Ultimate Wealth Report subscriber or Absolute Profit subscriber. We talk about old picks so often that if you'll just go to the search field, you'll usually find your answer there. And also, um, you can find out a lot of stuff about our present picks on there as well. Getting started videos, best place for you to start if you're new. That takes you around the site and tells you where a lot of stuff is. Um, this right here talks about how to average down and why we do that. It's a very crucial piece of our strategy. Why people get it wrong in the stock market. Why people tend to be on the wrong side of the market. Here's the 6 keys to financial success, which is a video that I did in a church on my book, The 6 Keys to Financial Success, which is biblically based and talks about what the Bible has to say about money. So it has a lot to do with your personal finances and some to do about your investing. The fundamentals that matter and why they give us confidence. These are the fundamental metrics that I use, and I break those down into plain English why they matter. Um, why momentum trading is dangerous in my opinion, and why we don't do that, which is what most people do. The technical indicators explained. So if you hear me talking about moving averages, RSI, MACD, all that kind of stuff, that's where you'll find the explanation of all those indicators and why they matter to us. How to think like a successful investor is basically what this one talks about. Very important. For some reason, those duplicated. I have no idea why. I think it's when the site was newer. And then one of my most valuable tools in analyzing trends, Elliott Waves. So if you see me do the 1, 2, 3, 4, 5 ABC stuff and wonder what all that means, that's broken down there and in more plain English why that matters. So again, all those foundational and fundamental videos, even if you're experienced, it's good to go back to the basics and run through those, once a quarter, once a year, something like that. Even if you feel experienced. In other words, Tiger Woods talks about how he goes back and has his coach take him back through the basic golf strokes and golf swings very regularly. And you think, why in the world would he do that? I mean, he's at a pro level. Why would he go back to basics? Because there's this tendency to evidently drift away from basics and get sloppy, evidently. And again, I'm not a stock pro. I'm just referencing somebody who is, and or golf pro. I mean, I don't even play golf. I mean, I shoot balls at Top Golf very badly, even, and putt very badly. So real golf would clobber me. But there's a need to go back to the basics because we tend to veer off course in life if we don't realign and refocus. It's just something about human nature. So I would encourage you periodically to go back through those. Those are timeless. So those are going to be true, 100 years from now. They're going to be true, 5 minutes from now. So that's the good thing about this Ask John page. So with that said, let's go through the overall general market and take a look there. The overall broader market is still, very overbought. We are approaching old highs. We're basically about at the highs here, not quite to the highs here from this bounce up here. I would be shocked personally if it goes past this high here, because typically, this should be end of wave 5. This should be wave A. This should wave B, which A and B are the earlier parts of the downtrend, and then a long wave C. In rare instances, wave Bs can actually come up and spike slightly higher than wave 5, but they have to be like a head fake false breakout thing and then turn around and then fairly quickly start working their way back down. Those are really, really rare. Matter of fact, they're so rare, some people don't even believe they're possible that follow Elliott waves. But nonetheless, could happen. I doubt it happens, but could happen. If it goes notably above this and stays above this, then it means we're still in wave 5, which I don't believe that we are. But again, the price would prove that at a certain point. And if it does, then what's that mean? That just means the market got that much pricier, that much more risky, that much higher price to earnings ratios, and then it's still just delaying the inevitable, where those PE ratios have to compress and come back down out of the clouds to some sort of sanity. And the only way that happens is price drops relative to earnings, because earnings can't zip up relative to price fast enough. And so that's the only way you get price multiple compression, PE compression, to where you can get stocks at a value again to where they can support heading ultimately higher once again. So if that sounds like a bunch of gibberish to you, just know in a nutshell that means the market is way overextended here, way risky, way expensive relative in price relative to the average earnings on the S&P 500, which is the 500 largest companies in America. It's funny that S&P 500 index actually tracks something like 503 or 504 companies, but anyway. These momentum indicators continue to die down, MACD and RSI. The price is still very far away from the 200-week moving average, so there's even technical risks over and above fundamental risks that are shown that we don't want to be a part of and want to dodge. So it's why we hold larger cash positions when the market is elevated and very high. Also in the fundamental section, I posted a chart from Zero Hedge that talked about the longest running bull markets in numbers of months since the 1800s, and we're neck and neck, like a month or two away from like the longest one that's ever happened. And that was the one that ended in like 2000, 2001. So you know how that ended very badly. So it shows how much we're pushing the envelope, fundamentally, technically, historically. I mean, any way you really slice it. The market's been overbought for a good while on this bounce back up. I still believe at this point this is what's called a bull trap or a bear market bounce, which is where this is a bounce within a larger down move down. We've already had a lower low. Now we're looking to see if we get a lower high. The point at which it becomes very confusing in the markets is if you have a lower low and then for some reason you make a higher high, which is possible. They're rare, and in those cases, it shows the uncertainty among the market participants of where the market really should be and should be going. But anyway, I believe it falls shy of that. Today, on the day of this recording, it's the day before NFP, non-farm payrolls. Again, if you want to find out more about that, I posted some about it on the fundamentals news and charts section. And then also you can put that into wikipedia.com, excuse me, not Wikipedia, investopedia.com. So investopedia.com. I would bookmark that site, and any term you ever hear me use that you go, wonder what the heck that means, put it into Investopedia, and you will find usually even a better detailed answer than what I can give you. But tomorrow is the big payroll report in America. And usually in the day or two before that, the market usually doesn't do a whole heck of a lot because institutions don't want to commit a bunch of new fresh capital to the market, not knowing what that big number is going to be. Not every month, this is released on the first Friday of every month. Not every month is it a market moving event, but many months it can be for stocks and especially for currencies. And the big currency moves can even affect the stock market as well. So it's for sure big for those two markets, maybe for bonds, I don't know, but it is for sure stocks and currencies. And so So that probably has the remainder of today's trading session not really amounting to much. Matter of fact, as I'm recording this, we're actually coming down to some of the last little bit of the trading session anyway. So S&P, even on the daily, still extended a bit away from its 200-day moving average. Notice this moving average had gone from up to sideways at best to even maybe, or could be argued, slightly down. So, of course, we had a death cross here, and some people go, well, we had a bullish cross here, a golden cross here, which would technically be true, but typically when you have a quick whipsaw like that, it's usually a false signal and usually just humps over and heads back lower, back out down into the downtrend. Also, if I'm right about this being wave 5, this being A, this being B, then the market heads lower, and this for sure in that case is a false signal there. MACD's been kind of flat. RSI's been overbought for a while, so again, just a lot of things there showing really a lack of upward momentum in the market. So we've got GLD as our first pick. This one was had run up, was in need of a pullback, and now we've got a pullback that's happened. This one could have been either ABC here and then getting ready for the next move higher here. I don't think this is an ABC this way. So I think we're probably gearing up for our next move higher. I know we've had a very nice rebound off the lows in gold today, right at its bottom Bollinger Band. You got a fresh golden cross here, higher highs and higher lows. MACD's, looks like it's getting ready for its next buy signal as that histogram even gets a little less negative. Selling volumes dropping off. RSI is a little stronger than it was on the last time. So lots of good positives there. So I'm looking for gold to rally higher soon. So again, very bullish on it. So I think we're ready to do this. But if something happens and we do this first before heading there, that's fine too. Normal market mechanics, no big deal there. So of course we had sold CHL, so just know that one's a goner. We took our profits there, and man, I mean, we took our profits, and no sooner than we did, this thing gapped down lower, and then had another gap down even right in here. So it slid from 55s, almost 56, down to 49s in like a blink, and it's still hanging out some. But the distance from where the price was and the 200-day moving average, and where the price was and the 200-week moving average, coupled with it being at former resistance, highs right in here, here, etc., and how far it was from the 50-week moving average as well, that all showed me the near-term risks that were posed to the stock price. And also we happen to be right up or into the top Bollinger Band on the daily to boot, and overbought on RSI, and a little bit of divergence starting to happen on the MACD, etc. So there's a lot of things setting up, a lot of warning signs that we could have a pretty serious pullback. We were up enough on that to where it was time to pull the trigger on it, avoid this downside, which it wasn't guaranteed that this downside had to happen, but it was highly likely. It was statistically likely, high probability that it would, and it did. And we don't know. I mean, it could it go on back up from there? Yes. Or could it sink a bit further? Yes. I mean, and that gets a little tougher to judge near term, because typically these things will pull back to the 50-week moving average, and usually then some. If it does, then you could see this go 47, 45, something like that, before you find any footing for it. So that's why I'm not itching at this point to get back into it. Also, another thing that I don't really prefer is that this was steadily heading higher, and now this is bending down a bit. So that's another concern too. So with us hitting these, multi-year highs, with the exception of this one little spike blip here, this has served as a ceiling for a good handful of years. So I'm just not inclined to want to be anywhere close to those prices there. So I would really, this thing would really need to probably get slammed quite a bit more before I would be interested in it, even though it is still fundamentally sound. So that one's been sold. So FXB is position number 2 now, in other words. This one, oh, there goes the bell from my trading station. That tells you the market just closed. So even with all the Brexit stuff still up in the air and the back and forth each day, this one still continues to improve overall off of its lows set at the latter part of last year, and it's even had even lower lows than that have still held above, which happened coming into 2017. So this is likely wave C, 1, 2. If so, we're getting ready to head up into wave 3 here. Some of your worst sentiment spikes were on wave C, which wave C is the bottom of the downtrend. Wave 1 is the first wave of an uptrend. Wave 2 is the first pullback within the new uptrend. And wave 2 is also one of the periods of some of the biggest negative sentiment out there as well historically. And so that would be true to form there and there. So that all lines up. So if that's the case, then we would be heading into wave 3 next. And so we would see this head notably higher overall. Now, when I say this head notably higher overall, it doesn't mean that it necessarily has to, go straight there. You can always have some sort of, pullback like that before you get there. So just know that can happen. It's normal market mechanics for any of that type of stuff to happen. Then we've got EWW. EWW looks to be gearing up for a next run above its 200-day moving average. We can't say 100% for sure. The time will tell, but it's been holding. It's been holding right below this moving average, which is typically a sign of strength that it wants to break above it and break above this ceiling of the 200-day moving average. And then when you couple that with the MACD's been improving a good bit here lately, and the selling volume has been dropping off, there's a good chance that we do see the next surge higher like that. But could something come out of left field and cause it to do this before doing this? Sure, it could. And neither path bothers me one little bit. Obviously, this is the quicker path, and obviously, any human wants quicker profits, just as soon as they can get them. So obviously, I'd love for that to be the path. But knowing how markets do, it might be this way, it might be this way. Either way, it's fine. It's cheap fundamentally, and in time, it's going up, and which means it's going to bust through this 200-day moving average. Also, when it does move, it could move quite quickly because long boring ranges, make for long, strong trending moves. And so we have been in a range for several months here now, and so we could get a fairly strong breakout one way or the other. And so we could get that surge fairly soon, or this surge fairly soon, and then rebound there. But that's what I'm looking for to have happen with EWW, and very very promising with what we're seeing there. I believe those companies will do well. Also, Trump has cutting them a little more slack on the border, and so that is favorable to those positions as well. But even if not, I believe with everything that's going on with the U.S. and Mexico and the border and trade and NAFTA, and which goes under a different name now, all that, I believe all that's factored in with EWW going from 68.51 years ago down to 37s in more recent times. So I believe pretty much the bad news that you could have has kind of been baked into the cake, so to speak. And along with that, long ranges tend to beget long, strong trends, and you could say that this has kind of been in a range of sorts. Yeah, the highs have been lower, but the major lows have been somewhat about the same. So it's just kind of been around in this area for about the last 7 or 8 years. So it would not be unusual to have a long, strong surge higher. Here's likely your point of maximum pessimism, and here's your next biggest point. So I believe those who are going to sell have likely already done so, and it's another reason why I'm bullish on EWW. So GDX, by the way, fundamentally, if you're wondering why I'm bullish on any of these, you can always go back to the issue in which they were recommended, and all those fundamentals are there, and that big picture of why we like them, why it's strong fundamentally, etc. All that's there. I focus more on the charts and the technicals on the weeklies because that's what changes the most commonly. Fundamentals change slowly, technicals can change fairly quickly. So that's why there's a different focus there, and that's why there's also a big focus on the fundamentals on the monthly issues, since those are only mentioned 12 times in a year. So GDX, higher highs and higher lows, bullish cross here. By the way, had an interesting testimony from one of the subscribers that said he had gotten some option reports and implemented some of the strategies using GDX, and had made some really nice returns several times already off of that. So anyway, that was shared upon the site, and I appreciate him sharing that. That was really cool. And so just a little word of testimony there. Stop the video for a second to answer my realtor. So those of you who are believers, ask you, we got a showing tonight on our house. We've got a prepared showing Saturday that's coming on our house, and we've got a open house on Saturday afternoon as well. So if y'all would pray for the sale of that house, that would be awesome. Some of you have been praying for my trike to sell, and it sold. So my Goldwing trike has gone to a man in New York, and who drove down, and that was just God's favor there, because he looked at trikes all over the country and he liked mine better than any they saw in the country for the miles, the price, the color, condition, etc. So that was amazing. And so we know God's got a buyer for the house, and so just pray for that to happen, and I appreciate your prayers on that. So GDX, again, very bullish on it, bullish on gold, and GDX even over time will have a bigger move than gold even has. And of course, how bullish I am on metals. I mean, we've got gold, GDX, and silver now, which again, we don't normally have that much of a concentration in metals with only having so few positions. But basically, where we are in the market, there's not a lot of values to be had. There's not a lot of places to be. And the best places to be in an overvalued, overinflated market, and one of the longest running bull markets and longest running expansions in U.S. history, is to be in metals and gold and silver and gold stocks and stuff like that. So that's why we are, doing a little more than the norm would be, because we are in times that are much more exaggerated and off key than they should be. Or off kilter would probably be a better way to say that. So GDX, Golden Cross, higher highs, higher lows. We're probably not far from the next MACD buy signal. RSI is heading higher. Now with that said, even though this is improving and this is pretty much next to its next buy signal, and that MACD histogram is improving, and the selling volume continues to die off, and it probably peaked right in here and here. We may go on up from here, or we might for some reason have one more push lower towards the 200-day moving average before heading higher. Either way is fine. Either way is normal market mechanics. So just know that's all normal, and to be either one can be equally as expected. LPL is just has been steadily recovering and doing well, hanging out well above its 200-day moving average. In other words, in time, it's been now 2 or 3 months above its 200-day moving average. Very healthy uptrend, taking its time, kind of building some steam here. Meanwhile, you had a ton of maximum pessimism here and here. So that's good, because that probably means that this is a bottom, and that pretty much everybody who is going to sell has probably done so through this time period. makes it easier for the buyers to take back control. The technicals continue to improve overall with the RSI getting higher, MACD getting higher, doing the same. You've got your Golden Cross price bounced off the lower band, Bollinger Band, and 200-day moving average, and getting ready to head higher. So I think most likely its next move is getting ready to head on up real nicely. But could it do something like that? Sure, it could. So just know anything like that's possible. But I'm real pleased with where that sits. BBBY has really had a couple of impressive moves over the last several months. And again, this is one that a lot of people had just written off. I'm not saying U.S. subscribers, but people in in investing world, business world, because it's in the retail space, and they believe the lie that just Amazon and Walmart are pretty much going to survive and everybody else dies. And they're positioning everything as if that will be the case. And no doubt Amazon and Walmart are having an effect. And no doubt there's some retailers that are going by the wayside. But, fundamentally it's still holding up just fine. And so that's why we were going into this particular retailer as opposed to some others. Also, the pessimism was just so thick you could cut it with a knife. I mean, we didn't even entertain getting into this one until it had gotten hammered from the 70s on down. And of course, we got into it just above 20, but you've got your averaging downs in to where many of you probably have an average break-even price of about 14 to 16. So when this just goes back up to 20 or so, you've already made a really good return because of your averaging downs. But my point being was that there was a ton of pessimism in this period right in here, because even that's one of these big red spikes, and you really could probably widen that out to about there. So for a solid year and a half, I mean, they were just selling this thing without abandon. I mean, just crazy. And it just kind of came to a bit of a crescendo almost. I mean, just kept going higher, and now the selling has dropped off big time, and the buy spikes are your big spikes. And this one continues to firm up on its long-term charts on the MACD and RSI. So this one, I believe, is likely making its turn. But this move here was impressive. That jumped it from the 12s to the 15s, and then of course it trickled on up some more, and then got its next major pullback. But then it went from the 13s and jumped up to the 18 area before trickling back some. So again, another surge and pop higher. And look at these buys. This is over 50 million shares. This is even bigger, and over 50 million shares. So that's not just mom and pops there. That's institutions buying. That's also some short covering buying, of course, as well. But that's some savvy, big heavy hitters, big players. Because we know it because of the volume level, and we also know it because going back to the weekly chart, moms and pops don't go in and buy in downtrends like that because they're scared to death, and they have no confidence because they don't focus on fundamentals and fundamental soundness and fundamental cheapness. So therefore, they won't come in there and step in there and buy because they have no confidence to do that. So when you see massive spikes like that, that's savvy institutions that are doing the analysis like what I do, looking at fundamentals to see, are they solid first, and then if they're solid, are they also additionally cheap fundamentally? And if those two are met, then that's when I go looking at long-term charts. And I saw we had been in an A, B, C for many, many years. The selling had accelerated big time to where investors were emotional. And anytime the sentiment is atrocious and the downtrend has been going for many years on something that's fundamentally solid and cheap, then they have usually mispriced that, and we're there to step in then and take advantage of those disparities. And so this one, and again, we get into it, and not long after it gaps down, and some of you get scared, and then it kind of trickles down for a bit, and which concerns some of you as well. And the beauty of fundamentals is that you don't have to worry about any of this, because this eventually comes. Now, you don't know that's going to come super quick, and that's why we have a 2 to 4 year average time horizon, meaning a few stocks will be longer than that period and a few stocks will be shorter than that period. And so far we've had like 5 stocks shorter than that period. So just know there's going to come a time where it's going to be time for stocks to be right in that average, and a few stocks even be a little over that average, since we've had so many that were skewed to the short side of that average. But several nice things happening here. Golden Cross happening as we speak. Couple of big surges and gaps up, huge buying. The selling has just dropped off the map, big time. The MACD on the daily even continues to improve. RSI continues to improve. So things are looking good. It's trading above its 200-day moving average. Now, just know when these big gaps happen, I mean, hey, there's a couple things that could happen. It could end up garnering a bunch of confidence in the stock, and it going straight to a target of 20 or 21 or so for us. Or because it's gapped up, there could be some profit taking that happens, and it has some sort of pullback, and maybe even sometimes overshoot just a hair the moving averages before heading higher. And again, any of that's normal market mechanics, so none of that would shock us or surprise us. So we are technically out of LB, but there was somebody who was still in LB. I forget who it was. They weren't watching it and didn't get out when we got out on a big spike up. And so just know that one is building some steam, and is likely going to have a potential another run higher. So if it does, then whoever that was, whoever I'm speaking to, you've got your next shot at exiting that out. So then we've got CAJ. So CAJ has broken this downward move, putting in some recent higher highs and higher lows. 50-day moving average went from being down to up. That's that blue line there. Here's your point of maximum pessimism. So the you've got your down move being broken, point of maximum pessimism. Selling volumes dropped off big time. MACD's been heading higher. RSI has been heading higher. So all the technical things you would want to see. The next big hurdle, of course, is to get above the 200-day moving average and stay above the 200-day moving average. So I believe that'll be the next hurdle that you'll take a look at and see. And once it gets above that and starts to sustain itself above that, then it can really take off and head quite a bit higher. So this one has recovered nicely from the 26s to the 29s, and but it could pull back before heading higher. It could head sideways for a bit longer before heading higher, or it could just jolt higher. One of these two is probably more likely than this, but we'll take any one of them. But anyway, just very pleased with how that's coming along. So very bullish there. IBM has been relentlessly higher, and at some point that probably takes a bit of a breather and pulls back. So just know that's normal market mechanics. I mean, for this has been an unusual run from the 104s to the 144s in what, like 90 days or so, so that's enormous bounce back and recovery in a very short period of time. So it would not be strange for this to have some sort of pullback before heading higher. Does that have to happen? No, it does not. It can defy that. It can trade sideways above its 200-day moving average and then head higher. It can pull back to or below them and then head higher. Can this happen and it just keep going up without hardly any pullback, with this being that consolidation that it builds from? It can. It's not likely. I'd welcome it, but it's not the most likely. These two courses of action here are the most likely. And then you can't rule out, sometimes you can even get a deeper pullback before heading higher there. That would not be out of the norm either. But these two would be the most probable courses of action with IBM. So very bullish on it. It has really done well. And we got in at 146s, but with it going down to the 104s, you're able to get in your averagings. So your average is far lower, of course, so that by the time it goes back to the original entry price of 146, you're already up quite a bit on your money. So we've got a couple of stocks that are just, it wouldn't take much more of a pop, a few more bucks higher, and we would be able to take profits. But they may have their dips before they go back to where they are today and climb a few more bucks to get there. KHC has been consolidating here in these lows, but the bullish signs that I'm seeing are one, that here's the biggie. Here's your massive selling volume that's dropped off the map, which is good. Makes it easier for buyers to take back control. Now, with that said, it doesn't mean necessarily that the price has to break out and head immediately higher. Sometimes you can even have it break out and head lower once more before it heads higher. Its first battle will likely be with its 50-day moving average around in there, and then ultimately with its 200-day moving average there. So the good thing about KHC is that with the averagings that we've got in, really by the time it makes it back up in here, many of you are in some pretty darn good shape on that stock already. And it may take a little bit of time, because when one gaps down and has consolidated a bit and had that much selling, about a third of its float turning over, it may take just a little bit for that to happen, but that's okay. Also, they've got, let me see if I can find it. News just came out today. Yeah, it said KHC backs a venture capital firm that is making some investments. And so if that venture capital investment goes well, that's something else in addition to ketchup and macaroni and cheese and all their other stuff that could propel KHC higher in the future, which is just some of the investments that they make and some other things. So next we've got symbol E, and this one has had quite a recovery from the 29s to the 36s. This is its first time above the 200-day moving average in a bit, and that moving average is still not necessarily tilted up. So what would be typical, not what has to happen, but what would be typical would be for that to be a temporary pop above the 200-day moving average and it to do some sort of pullback, whether that's shallow, whether that's something more medium, or whether that's something a little bit more meaningful down there before heading notably higher. So, and I'm not ending at a certain specific exact number up here. I'm just saying the trajectory of it. So the good thing is with us being in the 33s, that it really doesn't take a whole heck of a lot for us to make a good bit on this one. So if the dip is fairly short-lived, and that's a big if, we don't know that, the market determines that, and we don't. But if it is fairly short-lived, then we could get a bounce back and reach our price target fairly quicker relative to our average. So that's always a possibility. Some things I like about it are the selling volume is abating. The MACD is continuing to strengthen. The RSI is continuing to strengthen. So lots of good signs there. Oil has continued to firm up. Both WTIC, which is WTI, West Texas Intermediate Crude, that we use a lot here in the U.S., has had a really big recovery from 42s to almost 63. And then, but nonetheless, they are dealing with their 200-day moving averages. But Brent crude has gone from 50.22 to 69.31. And that's not actually counting today's surges, which it was higher earlier in today intraday, because these oil charts are one-day delayed data. So it actually perked a bit above its 200-day on these intraday. So while they could definitely have decent sized pullbacks since they've made such a run over just the last 90 days, just know that any of these Brent or WTI crude could have some decent sized pullback before heading higher. Nothing would be strange about that, because rarely does anything just keep going straight up, right? It typically has these pullbacks along the way. So and can it kind of consolidate sideways and not have a dip and go head higher? Sure, that can happen as well. But just know, if it pulls back a decent amount, then you're probably going to see ENI, which is ticker symbol E, have its own pullback as well. And so that's why I say that something like, this would not be unusual. So just know that that can happen and would be just very normal market mechanics. And then we've got our latest pick, which is SLV. So SLV, again, who knows if we've called the recent bottom or whatever. We're in at 1410. It ended at 1422. We do know that there are many technical improvements that have happened. So as I told you before, silver tends to lag gold, but then ultimately outpaces it percentage-wise. So we got into our gold position long before we got into our silver position strategically because of that factor, so that we could reduce some of that lag time out of silver and make it to where we had less time in our investment, hopefully. And then, so things I've noticed about SLV is the pessimism starting to die off. The MACD is starting to head higher. The RSI is starting to head higher. We got a golden cross here. So we got our first, higher high here. And then we've had some sort of three-wave pullback here. So we were buying closer to the 200-day moving average. Now here's what we don't know. This could still go lower before it heads higher, or we could be at those lows and head higher now, or consolidate sideways a bit and then head higher. Any of that's possible. So don't get caught up on, did we catch silver's low or not? That's not the name of the game. That's you trying to obtain something that is unobtainable. That, yeah, if you invest in 40, 50 stocks, do you happen to hit one or two of them where you kind of caught the low or something? Yes. But did you do that strategically? No. You just happen to get lucky on that. Fundamentals don't tell us where the exact low is, and technicals don't tell us where the exact low is. They just tell us better times to be buying and better times to be selling. That's what they tell us. So nobody's going to get the ultimate high, because the novice thought is, we could have bought lower if something goes lower, or we could have sold higher if something goes higher. And you can never foreknow that. Somebody said the other day, well, some of the stocks that we've sold, some of them have headed higher. Yeah, and they could have just as equally headed lower. And if they were headed lower, you'd be kicking yourself saying, hey, I was up 15, 20, 25%, and then I let it all go back when I had it in the palm of my hand. So the prudent thing is to take those above average returns and lock them in, because you know that you have them today. You don't know for sure that you have them tomorrow, and to dodge unnecessary risk, and to shorten the length of time in your investment if you can. And so that's what we've done. So SLV, very bullish on. Again, for all the details, you can look at the latest monthly issue in the premium newsletter tab. The latest newsletters will always be up at the top of the page. So you go to the premium newsletter tab, and you'll find your latest weekly videos up there, your latest newsletters up there. They're easiest to see on the actual website itself. So I would start there and get familiar with the site there first before going to the smartphone and looking at it on your browser on your smartphone. Also, sell signals will be blatantly obvious, but you do want your email alerts turned on so that you're seeing those. And you also don't use technology as a crutch. If you use technology as a crutch, technology is almost destined to fail you at the time where you need it at most. It's just crazy how technology is that way. So if you get lazy and you say, well, Sean puts out an alert on something, I'll get an email alert on it, and then you don't visit the site for 2 weeks, 3 weeks, or a month, and all of a sudden a sale happened 3 weeks ago, and now you're down 5 or 10% off of the gains you could have had. That's on you. That's not on anybody else. So it's up to you to stay up on everything and to stay on top of things, because what else in your life pays you, literally pays you money, aside from your primary job? Very few things in life do that. So your stock portfolio literally does pay you to stay on top of things. So it was literally time that you end up getting paid for. You can take those gains, divide them by the hours that you got in it, and there's some monetary value there. So just know that. And it's a way for your money to make money as well. But the way that you retain the money made is staying on top of weekly videos, monthly newsletters, and sell alerts. And so, put down the reality TV, and if you're young and follow me, put down the Xbox for a little bit or whatever, and take 5 minutes a day or whatever it is, and look and see if anything was out there and happened, particularly if you can during the while the market's still open, so that if you need to sell something or average down on something or whatever, you can do it. There's very few things in life that are going to pay you outside of your primary job, and this is one of those few things in life. So put the focus where it literally pays you. Many things that people do in life does not pay them, and so structure your time to where it literally pays you. It helps your spouse, it helps your kids, it helps your lineage. Bible says a good man even leaves inheritance to his kids. So make it to where you can bless future lineage that's not even born yet, because of your stewardship of your assets, to where God can increase your territory. If you look at the parable of the talents, the Bible says that he divvied up, he gave to each person according to their ability. Now, who determines your ability? You do, because you determine how much you read the newsletters, stay tuned to the weekly videos, stay alert to averaging down opportunities, stay alert to sell alerts, read the foundational videos in the Ask Sean section. I've got it all there in a nice, neat little bow. You just have to go there, and it's served up on a silver platter. You just have to go partake of it. And so I can do most of the work for you and just serve it up for you, but you literally do have to pick up your fork and scoop it and put it in your mouth. And so I would encourage you to do that, to not get lazy on it, to not get sidetracked from it. If you can be sidetracked from money-making activities, you will be. And so you can this happened in my life, or I got busy, or this happened, that happened. You have 5 to 20 minutes in any given day or week to stay on top of stuff if it's priority. And if it's not, then just be honest and don't say I don't have time. Just say I haven't made it priority. But your phone is mobile. It doesn't matter whether you are literally sitting on the toilet, or you are stopped at a stoplight, or you are at your home or whatever. You have mobile connectivity to access this stuff. So in our modern day and age, we literally have no excuses, because we don't have to say, wait till I get back home to my hardwired internet and my desktop computer. We don't have to say any of that anymore. We've got the computer in our hand. It's our smartphone. We've got our tablet. We've got technology. We can go to, places and access free Wi-Fi if we need. So there's all kinds of ways. We literally have no excuses. So just realize, if you make an excuse, that's you setting yourself up for less dollars in your future. It won't be less dollars to me. It'll be less dollars to you. So I promise you, it's said with good intention, with your benefit in mind. And I practice what I preach. I stay on top of my stuff. So I'm not telling you to do anything I don't do. And you don't have to stay on top of everything like I have to stay on top of everything, because that's what you pay me to do. But you do have to be alert to take the time to listen to a weekly video, take the time to read a monthly newsletter, take the time to peruse the site. I would encourage you to try to peruse the site daily, particularly the fundamental news and charts section. It'll keep you abreast of a lot of stuff that's going on, and to make sure there's no sell alerts or whatever out there. All right. Thanks so much for watching, and God bless. Bye bye.